Hello, and welcome to the natural gas and soybean market analysis portion of Up in the Air for the week of March 1st. My name is RobMitstifer, and I will be providing the soybean analysis.
And my name is TomGowan, and I will be giving the natural gas market analysis. Weather has a direct effect on both these industries, so we hope to provide you with some weather-related insight into how the soybean and natural gas market will move in the near future. Now Rob will take it away with the soybean segment of this market analysis.
This time of year, the growing season is well underway in South America. Both Brazil and Argentina have begun their soybean harvest, with Brazil leading at around 30% complete, while Argentina has just begun. Market projections put this year's South American soybean yield at record numbers, indicating the potential for a large supply flooding the market. However, demand for soybeans has been increasing dramatically, largely led by the Chinese. So the question remains, is the large bean supply going to be met with equally large demand? We'll have to wait and see. The growing popularity of soybeans is thanks to its high protein content, especially when compared to wheat or corn. Livestock feed based in soy meal gives much more bang for your buck, and thus more farmers have been switching. Looking at recent prices, May contracts of soybean meal futures are up about 6% since early February. There are a few reasons for this, including the strong demand I mentioned earlier. Last week, a trucker strike in Brazil has slowed down bean exports as truckers who are demanding a lower gas tax have blocked the major highways connecting the growing regions to the ports. This has put some pressure on the market and will continue to do so until the strike is resolved. Also, the Chinese New Year was last week, and with China as a major player back in the market this week, more volume is expected. As far as weather goes, this past month has been wet in Argentina and mixed in Brazil. The latest global forecast system model is predicting warm and wet conditions in Argentina and cool and seasonable in Brazil in the short term, which overall is okay for soybean growing and harvest. And now here's Tom with the natural gas segment.
From late January until about February 23rd, natural gas prices had been on the rise. This was due largely in part to the persistent trough over the eastern half of the nation that ushered in cold shot after cold shot. Many cities in the northeastern U.S. record their coldest February on record this year. This extreme cold led to high demand for natural gas and therefore caused prices to rise dramatically. These two graphs show the 30-day mean temperature and 30-day mean temperature anomaly across the continental United States. It is evident that the northeastern U.S. experienced the coldest temperatures compared to normal out of anywhere in the continental United States. The storage report that was released on Thursday, February 26, showed that 219 billion cubic feet of natural gas were withdrawn during the week of February 13th to the 20th across the lower 48. Therefore, there are currently 1,938 billion cubic feet of natural gas in storage, which is now lower than the 5-year average of 1,968 billion cubic feet. It appears that the main cause of falling prices since the 23rd of February has been due to the long-term forecast of moderating temperatures across the northeastern U.S. The GFS indicates that there are signs that the stubborn trough will finally begin to ease its grip on the northeast and thus give us a break from the cold temperatures. With this outlook, I think it is safe to say that prices will continue to fall for at least the next week or two.
Well, there you have it, this week's market analysis. Let's hope those cold temperatures do retreat, huh, Tom?
Yep, I agree, Rob. Let's enjoy these last week of classes before spring break.
For Up in the Air, I'm RobMitstifer.
And I'm TomGowan.